Hey VA borrowers, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. Today I want to talk to you about closing costs, specifically a question that I get a lot, usually from subsequent home buyers, right? So not first-time home buyers, is can I finance my closing costs? In other words, rather than pay for them in cash at the closing table, can I roll them into the loan amount? The answer to that question is no. You cannot finance closing costs or other expenses like prepaids and escrows on a purchase transaction on a VA loan. You can't do it on a Fannie or Freddie loan. You can't do it on an FHA loan either. There is a small chance that you can do it on a USDA loan if you have a favorable appraisal, but that's not what we're talking about today. So just because you can't finance closing costs, and again, when I say closing costs, that means closing costs, prepaids, escrows, that doesn't mean that you have to write a check for it at the closing table. Today, I want to talk specifically about ways to offset the burden of writing a big check for closing costs at the closing table and explore some creative ways of getting those paid for. Let's take a look. Also, please stay tuned until the very end of the video when I give you a warning about borrowing money in order to pay for closing costs, prepaids, and escrows. Okay, again, there's no way to actually finance your closing costs on a purchase transaction utilizing a VA loan. That does not mean that you necessarily have to write a check at the closing table. The first way to get closing costs paid for, or maybe a better way to think of this is a way to avoid paying for them yourself, is to get a credit from the seller. In other words, when you negotiate to purchase a home, your realtor negotiates with the seller or the seller's agent, and the seller agrees to pay for a portion of your closing costs. Now, certain restrictions may come into play. There are caps on how much that credit can be. But generally speaking, in North Carolina, when we're talking about closing costs below $12,000, that cap doesn't come into play all that frequently. So you can get the seller to pay for it. And a lot of times this is what is actually happening when I talk to borrowers who say, well, on my last transaction, I didn't pay for any closing costs at all. I think I financed them. Well, what actually happened was that your agent negotiated with the other side and contracted them to pay for your closing costs. The problem with that strategy, and it's a good one, if they pay for it, that's money that you save, right? And it's money that you save immediately. It's going to offset your cash to close dollar for whatever that credit is. The problem is if you're looking in a competitive area, right? Maybe a competitive county, and Raleigh, North Carolina certainly falls into that category, and the surrounding counties, or a desirable neighborhood, it can be very difficult for your agent to negotiate that credit for you. Why is that? Imagine you're going to make an offer on a $500,000 home, and you're not the only one interested in that home. There are some other people kind of circling around ready to make an offer. If you offer $500,000 and ask for a $5,000 credit, the seller is going to get $5,000 less from you than from someone else who may come up and just offer $500,000. So getting a seller credit should not be something that you bank on, no pun intended. And a lot of times I talk to borrowers who've been pre-approved from other banks, particularly from big nationwide online banks, and the bank will just encourage them to get a seller credit if they don't have any cash savings. That, again, it's a good strategy, and in less competitive parts of the country, that may be an easy strategy and one that you can depend on. But you want to talk to your realtor and discuss the feasibility of actually securing a seller credit. Okay, the second way, or a creative way to offset your closing costs, prepaids, and escrows, or get them paid in a different way, is to, and I hate to do this to my realtor partners, but you can get a credit from your realtor, right? Sometimes this happens when your realtor is handling the sell side of, you're selling house number one, buy house number two. Maybe they'll give you a little bit of a break on their overall commission, or they can give you some of their commission back as a credit. This doesn't happen that often, but it is totally possible. From an administrative perspective, we just need that realtor's broker in charge to sign off on it. The third way to offset that cash burden of closing costs, prepaids, escrows is to get a lender credit. Okay. Now, a lender credit is kind of tricky. A lender credit is essentially the opposite of points. If you're curious what points are and whether you should buy them, I have another video on that topic. Please check it out. So a lender credit works inversely to points. So on points, let's say a par interest rate is on a VA loan 6%. That means that's the lowest interest rate a particular bank can offer you without charging you any more money. At 6%, if you want to buy the interest rate down to 5.875, maybe you have to pay $500. And to get it down to 5.75, maybe you have to pay $1,000. And that's how that scale works. You move the further down the rate sheet, generally speaking, you pay more money. Now, those intervals do not always, are not spaced out uniformly always. In other words, it's not going to go 500, 1,000, 1,500 to go down an eighth, a quarter, and 3/8. The inverse is true as well. If you go back up the rate sheet and accept a higher interest rate, the lender can give you a lender credit. So now whether or not this is a good deal or not kind of depends on how much of a credit they're willing to give you. If by increasing the interest rate 1/8, they could give you $4,000 on a $500,000 loan, that's a pretty good deal, right? But if they have to increase the interest rate by 5/8 to give you $1,300, that's almost certainly a pretty bad deal. Now, this can be a slightly tricky strategy, not necessarily as tricky as negotiating for a seller credit, but it can be slightly tricky because how much of a credit you can be given isn't exactly known until the lender goes to lock an interest rate. So if you're looking at a home on a Friday afternoon, and the only way you can qualify for this home is if you get a $3,000 lender credit, and you may not lock an interest rate until the following Monday morning. Well, rates Monday morning may open differently than where they closed on Friday. Or maybe they've moved a lot since the last time you spoke with your mortgage lender. If that was 10 days ago, rates could change dramatically in that 10-day period. So what's the consequence to that? That means one of two things. Number one, maybe they can't give you high enough, or they can't give you a lender credit high enough to get that $3,000. Maybe they can now only generate $1,500, or maybe they have to increase the rate so much that it's really not worth it anymore to use the lender credit to offset those costs. So you want to be a little bit careful when you're doing this. And if there's any room for error, in other words, if you're absolutely pushing your budget of what you can be approved for in a VA loan, then you need to be a little bit careful about, totally relying on that lender credit. The fourth way to get your closing costs, prepaids, escrows paid for is with a grant, maybe from a church group or a community group, a veterans organization. There are some veterans organizations out there who will give closing cost money to veterans, particularly combat veterans who have service-connected disabilities. There are also state programs that give money to nearly everyone who's a first-time home buyer or who falls within under a certain income limit. These grants can be given to you. Sometimes they turn into loan amounts here in North Carolina. North Carolina Down Payment Assistance is an interest-free, payment-free loan, but it's still a loan. And you can use this money to offset those closing costs. On a down payment assistance program, the only catch is typically the primary mortgage has to be done through them as well. And there could be some pricing considerations, in other words, interest rate considerations, that could make that not the best idea. The fifth way to get closing costs paid for or sort of offset is to get a gift, right? You can get a gift from a family member or a person of close association to you. I use that language because there isn't really a hard rule for who is eligible to give you a gift. The more immediate the family member, the easier it is to be an approved gift donor. There's no real limit to how much a gift can be either. The only thing is if you have an excess gift, you may have too much money. Maybe you need to turn it into some kind of down payment. But gifts are totally permissible on VA mortgages. The last thing I want to talk about today in terms of strategies to offset your closing costs, prepaids, and escrows is you can get a loan to pay for that money. You can get a loan from mom and dad. You can get a personal loan. You could borrow against an existing asset, right? Like if you already own a home, maybe you can borrow against a car. That might be kind of tricky to accomplish. But you need to be careful when you do this. Number one, if you are borrowing against an unsecured asset, certain rules kick in, like whether you can, what you can use that money for. The other thing, this is the big one, is that we now have to count that monthly payment, right? That's part of that loan as part of your debt to income ratio. So if right now you are barely qualifying for the home that you are purchasing, if we add $350 into your monthly debt obligations, that may push your debt to income ratio beyond the approvable zone, right? Beyond the approvable limit. So be really careful when borrowing money to pay for closing costs, prepaids, escrows, and talk to your loan officer before doing that if that's your plan. Again, my name is Steve Doherty. I'm the Raleigh VA loan guy, a loan officer here in Raleigh, North Carolina. If you would like to talk to me or have me get you pre-approved, I can do mortgages in Virginia, North Carolina, and South Carolina. Please reach out to me, send me a text message, give me a call, send me an email, leave a comment below. I would love to talk to you and do your mortgage for you.